Hello everybody, my name is Peter Dorrington. I'm going to be your host today for this webinar. Whilst we wait for a few people to log in, and I can see that people are still joining, I'm afraid I've got a bit of a tradition in that I tell very bad jokes for a minute or two. It's okay, you don't need to laugh. I can't see whether you groan or you laugh, and laughing is entirely optional. So a little hard to find jokes about procurement, but I've done my best. So for the next 60 seconds or so, brace yourself for some very bad one-liners. So, did you hear that the condiments category buyer at Costco is embarking on a strategic sourcing initiative? Yes, they really are this bad. How many supply chain planners does it take to change a light bulb? None. The light bulbs are late again. And the easiest way to find out, to find missing inventory, is to place a new purchase order. But if you're a supplier and you think that nobody cares if you're alive, try missing a couple of delivery dates. You'll soon see how important you are. And the supplier selection process within the meat processing factory was a real challenge due to the number of stakeholders that were involved. And finally, and I know that you'll be sighing with relief, Coke has nearly rolled out a new packaging format, but they bottled it. And with that, I'd like to say a proper welcome. Hello, you are in the right place. In a moment, I'm going to introduce our speakers. But first, what I'd like to do is welcome you all to this ELN webinar in combination with KPMG and Vertex. Now, before we begin, I'm going to do a little bit of housekeeping. As you can see, you don't need to worry about video or audio, that this is a webinar, so there isn't anything being recorded that will have you on it. However, there is a chat function. Now, if you haven't found it, there should be on the side of your screen a little menu button. It's 3 dots. If you press that, it'll open up and you'll be able to see that one of the options is chat. I really do recommend and ask that you use the chat to ask questions. So if you put a question there, I will definitely try to come to it at the end of this session. But also you can make observations or share some insights or some examples. You can even tell really bad jokes if you like, but I would certainly recommend using it for questions. Now, the webinar is being recorded, and at the end of the session, I'll come back to this about how you'll be able to access that recording. So you will get some follow-up with instructions about how to download the recording or capture that again. So now that that is out of the way, what I would like to do is introduce our speakers. So we've got a real panel of experts for you this afternoon. Our first speaker is Mike Schaefer. And Mike's the manager of procurement technology at KPMG. So he's a manager with 9 years of experience working in both the US and the UK, so both sides of the pond. He specializes in helping large organizations transform their procurement function by the use of technology in the source to pay process and travel expenses. Now, Mike will be followed by Mark Rems. Mark is the practice leader of National Transaction Tax Services at KPMG, a specialist in global indirect tax technology, which is the crux of what we're going to be talking about this afternoon. He's roughly 20 years of experience in this field of tax and technology, and he specializes in helping clients with the indirect tax function. And then completing our panel of experts, last but by no means least, is Kirsten Schaubenbauer. Now, Kirsten was the global partner leader at Vertex, and she's been helping Vertex's clients turn their goals into reality also for nearly 20 years. Now, in her current role, she manages Vertex's relationships with procurement-focused organizations, which I hope would encompass all of you. So in a moment, I'm going to hand over to Mike to start our conversation, but I just want to let you know or to remind you that at the end, there will be a short Q&A at this session. So put your questions into chat, and I'll come back to you, and I'll be observing the chat all the way through the session. You'll see me marking them up as questions as I go through. So we'll try to get to as many of those as we possibly can. If we can't complete them all today, we will definitely be in touch with you as part of the follow-up. And finally, I promise I will bring this all to a close on time. I'm going to be very protective of your time. I appreciate the effort that you've made to join us today. So we've a lot to cover. So without further ado, what I'd like to do now is ask Mike to lead us away. So Mike, over to you.
All right. Thank you, Pete. Let's start off by taking a look back at the past year and how our world has changed. The number one headline, of course, is COVID-19 and its profound impact on our personal and professional lives. Prior to COVID, we found that our clients were focused on their usual 3 to 5% savings targets, increasing automation and self-service, and just getting more spend under management. However, with COVID, procurement was tasked with a whole new set of challenges on top of their existing goals. The first trend we saw was that companies were reverting to focusing on the fundamentals in the face of this uncertainty and concentrating on maintaining resource continuity. Now, we saw supply swings in many different industries as plants would go offline with an outbreak or because of complications with international trade. Companies became very aware, if they weren't already, of connections in their supply chain to those early outbreak centers like China. However, some segments also saw significantly increased demand. So now, for instance, building supplies or furniture industries saw increased demand as people around the country stayed home and spent more time on that old couch and decided it was time for a new one. This left a challenge for procurement to compete for scarce resources to fulfill their orders. Speaking of staying home, we also saw a significant shift in how we work, with working from home becoming the norm, or at least part of the routine for many workers. Now, this created challenges with getting employees the things they need, like extra monitors, keyboards, and other equipment. And previously, procurement policies might have forbidden shipping to employees' homes, but now it's critical in supporting your workforce. Now, tax is also impacted here with the challenge of managing an extended address book and the jurisdictional challenges that come along with it. Finally, we saw companies that need to take a detailed look at their contracts and assess contractual liabilities, such as minimum order quantities or volume discounts. These contracts hold your exposure and contain the different levers to pull, like cutting costs by reducing operations and remaining flexible and more agile in the face of this adversity with COVID. Now that we've had a look back, let's focus on where we're going now. So the vaccine rollout is underway, itself quite a feat of supply chain coordination. We're seeing headlines start to transition to tracking this rollout and ultimately closing the chapter on this pandemic. There's still quite a bit of uncertainty as to when that will happen, but organizations are already preparing for that next big transition. Now, forward-looking procurement leaders are examining the operating model, the skill sets, and the technology platforms they need to stay strategic. Because the procurement function is so critical to business continuity, the time is now to implement modern and agile solutions. When governments shut down manufacturing plants, many organizations didn't have current supplier profiles to judge where that supply chain risk existed. And now companies are looking for solutions that proactively monitor and provide a framework to mitigate that supplier risk. This crisis taught us a lot about the benefits of process agility and the speed to adapt. Now, while I don't have a crystal ball to say when or what shape the next crisis will take, there are definitely some candidates out there with things like global climate change or even the recent severe weather in Texas. In conversations with our clients, it seems like working off-site in some fashion will be here to stay. This was the biggest work from home experiment we've ever seen, and we're having to take a hard look at how we live and work and put the pieces back together to see what worked, what didn't, and how do we adjust going forward. One of the things that we need to make sure is included in our future state solutions is the ability to harness this remote workforce and maintain the ability to collaborate. So, a lot of executives have started looking at procurement for insights into strategy, because you have all these insights about your spend, about your contracts, and how to execute on the levers that the C-suite want to pull. Procurement can help navigate from where you are today with your open commitments, your open contracts, to where you want to be. Procurement has these insights into getting capital to make it happen too. So, what if we want to extend payment terms? Where's the best place to start? What if we want to take advantage of early pay discounts? Again, all this is information is contained within your purchase orders, your invoices, and ultimately your procurement platform. Now I want to take a moment to highlight how the platforms are innovating. What are some of the key components that you can use to drive your agenda? So digital transformations have been top of mind for the past few years now and are becoming table stakes. The conversations we're having with clients now are about what additional value we can drive with these platforms. One of the main themes running through this is the ability to get useful information into the hands of decision makers for both proactive and reactive decision making. This information is the building block which will allow you to build an agile and resilient process. We can use this momentum that the crisis has provided us to get and maintain a strategic seat in the C-suite by driving value from your information. Turning those contracts into a source of useful information for the business. So with that, the first differentiator is having a robust contract management process and the supporting tech. Previously, contract management meant having all of your contract documents in a central repository. That's kind of the basic level, and it doesn't necessarily cut it anymore. Now we're working with clients to take that to the next level, pull insights out of those contracts, compare it across the business, looking for specific clauses around minimum order quantities or specific exposures. This is where we're doing some pretty exciting things with AI capabilities. Now we can use the AI to look for non-standard terms or aggregate an MSA with the 20 or 30 SOWs that have been signed by the various departments throughout the years. And this will essentially allow you to catch up a bit with respect to your contract data. Going forward, we're also working with these companies to standard templated language. But when the business wants to adapt and to those non-standard terms, also bring in the appropriate teams, bring in procurement and legal to sign off on those changes. And continuing with the theme of managing exposure, we want to come to supplier risk and performance management. Supplier data is an area that a lot of companies have historically struggled to do well. I'm sure this resonates with many of you on the call. That you've struggled with duplicates or incomplete information, outdated contracts, and poor supplier master data in some way. Without doing these fundamentals well, you're leaving value on the table. I was just working with a facility services company and helping them to improve their supplier data so that they could in turn turn that into a supply chain differentiator to drive revenue. For example, they were planning to offer transparency to their customers and align the products and services offered to that customer to align with their goals. So, for example, if the customer wanted to be more sustainable and they had that as a corporate goal, then this client would make sure that the goods used in delivering the services to that customer would also have those same attributes, that they would also be sustainable products. And creating these types of modular supply chains is only possible if you first have a good handle on your data. And then the step following that is to standardize that information, and then you can start building supplier risk and performance management processes once you have accurate data and have a good foundation to start with. But again, we need to take the perspective of how we take this to the next level. What's coming out there? What's the future like with respect to these platforms? And that includes bringing in more frequent monitoring. Previously, we saw companies rely on onboarding controls and to mitigate the risks of working with that supplier, and then maybe an annual checkpoint to keep up to date with that supplier and their risk profile. But now, as we've seen with the pandemic and other challenges, the speed of business and the speed of disruptions is getting ever faster, and we need to have closer to real-time information. For example, if news breaks on the supplier, you need to be notified. Or if there's a change in the directors or the C-suite, you need to be notified. So platforms out there are going to capabilities and so doing things like starting to trace back up the supply chain, there's suppliers of that you know already, then that's also highlighted for you. So with the platforms out there today, you're not having to go out and find that information. It's just a part of the process, and you can trust the system to do the heavy lifting for you. The final point here is around collaboration and community. So the pandemic has really disrupted our personal connections. We're no longer getting the opportunity to have that water cooler chat. It's basically a phone call. I know for me, it seems like a lot higher bar to clear than popping by their desk. So this is where we need to make our platforms feel more collaborative. And whether that's just being cognizant of what we've lost and use video conferencing to try to close that gap, or we look at procurement platforms that allow us to have that quick back and forth flow of information to get things done. And now looking at externally, now that the cloud has really taken off, it's seen some years of historical data. The platforms are starting to take that information and turn all that into added value for their customers with things like community-based benchmarks, allowing you to see in real time how you're doing against peers or near real time, and then also enable collaborative sourcing and savings opportunities. Going to market together and use the power of the community to work. We've focused quite a bit on the procurement trends. I wanted to kind of bring us now towards trends at the intersection of procurement and tax. So with the new set of tools out there, organizations are starting to think about what it would look like to not have AP key in any invoices. Imagine a world where everything is fully electronic, or at least gets into your workflow that way. The primary driver here is indeed electronic invoicing, making it easier for suppliers to flip purchase orders and quickly get an invoice out, sometimes even doing it from their truck in the parking lot before they leave. Take another case there is in the Nordics, we're seeing a very high percentage of electronic invoices, something in the 90+% range, in part due to government standards. But there's still a tail of PDF and paper invoices, both there and around the globe, and that's where OCR solutions come into play. So we're really starting to expand that toolkit of invoicing solutions to help you get to that process where you can start looking at invoices more strategically and not having to focus on that data entry piece. Point number 2 is about how procurement and tax organizations interact with the business users. So we're seeing that more and more platforms drive towards self-service and that we're asking users to assist in the tax determination process. Now, I'm not saying it's feasible or even recommended for organizations to ask their users to be tax experts. So instead, the users are being presented with questions that are in their business language about that purchase. So questions like, what are you buying? Where will the work happen? Will it be off-site? Is this related to a new build or repair? And that way, tax is getting the information they need to make their decisions and even automate that process downstream. Speaking of where work will be performed, we're seeing new challenges with the digital economy in that more and more products are exclusively digital, or at least have significant digital components. The old joke that you wouldn't download a car has new meaning these days as Tesla and others move to a subscription model for their software, allowing you to indeed purchase updates for your car. How you design the procurement process for these digital goods affects the data captured and ultimately the ability of your tax department to review these purchases. And I know we're focused on indirect tax today, but this extended work from home model is also affecting states' tax bases for people like commuters and remote workers located in other states. And I don't think we've seen the legislation end here or even the court cases. So we'll need to continue to monitor to see what happens as these legislators enact to shore up their budgets. And the final point here I'd call out is that content is king. It's something we've been saying for years now, but it still remains true. Streamlining how you're using catalogs and the host of contracts you've got in your application, like punch outs, and really making it easier for the end users who might not be on site anymore. They might not have access to ask people questions. They just want to be able to go in, find the item they're looking for, maybe purchase it through a simple approval chain and move forward. The organizations and clients that we've been working with who have implemented some of this stuff are finding it a lot easier for folks at home to get the things they need very quickly, in addition to some of the supplies they need for their manufacturing facilities. This content in turn allows richer and more structured data inputs for the tax calculations. So now I will hand it over to Mark to discuss, what type of data we're talking about and what are some of those process touch points that are involved.
Thanks, Mike, and great summaries. So good morning, good afternoon, depending on what time zone you're in. My name is Mark Rems. I'm the practice leader in our transaction tax systems practice based in our Philadelphia office. I have over 20 years of experience working with great solutions like Vertex, especially integrated with procurement solutions. And I'm going to spend the next 15 minutes really pivoting towards the tax side and how it's interwoven into these procurement system implementations. And when we talk about tax, the predominant taxes that we see around these procurement systems is indirect taxes, transactional taxes. And these are taxes based on a specific business event. So anytime a company buys something, anytime a company sells something, if you move goods across country borders, there is an impact to indirect taxes. You have to have a process in place to evaluate, is that transaction subject to indirect taxes? And with KPMG as a global leader in implementing procurement solutions and tax technology, we've invested a lot of time to help figure out what right is for clients. And that's really the goal of the next couple of slides here, is to kind of highlight some of those best practices, what we're seeing in the market when it comes to optimizing indirect tax compliance and adding those efficiencies to organizations. So this slide here really focuses on the life cycle of indirect taxes. And you can see the various touch points and when tax calls are generally triggered as business events and objects occur. But starting out, where there isn't generally a tax calculation, but an extremely important point is making sure that master data is set up properly. So when you're adding addresses, whether they're tied to a vendor or tied to a ship-to location, do you have accurate information? Are you getting down to the ZIP+4 level? Because obviously in certain jurisdictions, like in Colorado, it depends on what side of the street your business is on, can impact what vendor charge sales tax or consumer's use tax rate is applied. Are your commodity codes, your purchasing categories granular enough to help drive good tax decisions at the end of the month? So don't just have a commodity code for software. Potentially look at breaking it out: CAN, custom, SaaS, tangibly delivered, electronically delivered. If you want to validate taxes that are being charged by the vendor and have an automated process, you need to understand what you're buying. So make sure you spend that time up front in master data cleansing. Once the data is set up, the procurement process starts with a requisition and purchase order. And that's the first time these systems generally look for a tax amount. You need to know the who, what, where, when, how to determine whether we should have tax or not. But that tax calculation is important because we want to know the true cost of procurement. A lot of these solutions like Ariba, Coupa, Ivalua, they have sophisticated logic around workflows and dynamic approval processes that you want to leverage. So instead of saying this purchase is $100,000, you probably want to know it's $100,000 with $10,000 of tax. So you want to know that true total, as it can also impact the thresholds that define what resources have to approve that purchase order. From there, we have our goods receipt and service entry. Typically, these procurement solutions are not making calls at that point, but simply bringing in the taxes that were calculated at the time of PO. The next activity, once we've received the goods or the services have been delivered, now we get into the invoice validation process in these procurement solutions. And invoices can come through in a number of ways. They can be manually keyed in to the procurement solution, or they can funnel through the network. And that's really the power of these procurement solutions. It is a two-sided network where vendors are logging in, entering invoices, and you're receiving those invoices. And as part of that invoice validation, you can trigger tax validation. So is the vendor charging me the right tax? If not, what do I want to do? If the vendor hasn't charged me tax, but it's a taxable purchase, I need to do something. I need to drive some sort of accrual in my back-end GL system. So having that tax validation up front in the procurement system is extremely valuable. And then from there, once the invoice clears invoice validation, it then goes to OK to pay. And these procurement systems are not accounting systems of record. They're not your GL. Typically, you're pushing these objects down to an ERP like an SAP, an Oracle, a D365. So how are you going to push down taxes to the right accounting? In the US, vendor charge sales taxes are expensed. In Canada, PST taxes are expensed, but GST, HST is recoverable. So there's different accounting for those taxes, and that has to be considered when you look at these OK-to-pay integrations with your backend ERP and GL platform. So why is this important? And let's just talk about the cash savings. I mean, when you think about it, every single purchase that funnels through one of these systems has to be evaluated for taxes. And when you talk about VAT, GST, global rates that can go up to 27%, and domestically in the US rates that can exceed 10%, that's a meaningful number. And what we've seen, and we've seen a lot of studies, typically with $1 billion in spend, studies out there say there's $6 million in wasted transactional tax costs. So that's paying tax when you shouldn't, or incorrectly accruing tax. And that's directly hitting your bottom line. So that is meaningful dollars going out the door. And aside from just that, there's also other considerations. So internal costs. What happens if vendors charging you tax and your system says it's not the right tax? Do you have tolerances in place? That's extra work for your AP. It might block the invoice from posting. Tax, if there's an erroneous transaction or you need to drive an accrual, that's extra work for tax to review all these transactions, look at the ones where the vendor didn't charge tax, and determine if use tax has to be paid to the jurisdictions. All that time is money internally. And then there's also reputational concerns, right? If you're continually going back and forth with your vendor saying, hey, you shouldn't be charging me tax for these computers because I'm using them on my manufacturing line and my state has a manufacturing exemption, that's a lot of back and forth, can cause frustration with your vendor. And if you don't have a process in place to accurately self-assess taxes under audit, that creates a jurisdictional reputation concern that can also lead to penalties and interests. So that's just some thoughts on the overall cost of not getting this right. So what are some of those key considerations if you have a procurement solution, if you're in the middle of implementation, if you're thinking about an implementation? And that's really what this slide is highlighting. The first, and I alluded to it before, is making sure you have the right master data in place. So allocating the right time to ensure that you're cleansing addresses, that you're reviewing commodity codes, they have the right granularity. And if you're an R&D and a manufacturing company, also ensuring that you have cost objects to help you determine, well, I'm buying this part. Is it used in distribution? Is it used for R&D? Is it used for manufacturing? Or is it just used in back office? Those can also drive whether taxes should be paid or not. So developing that plan around master data is critical. And a key point here is it is much easier to do these things up front in the middle of an implementation rather than after the fact, because once you're live with your procurement solution, you're processing transactions, all the consultants have left, it's a lot harder to get these major enterprise changes into the system to account for taxes correctly. Another key point is how to manage tax variances. No matter how hard you try on the procurement side, you will never get to 100% accuracy. That's because there are limitations in data. For non-PO invoices, you might just be booking to a GL account and a cost center. So you might not have all the right information to enable good tax decisions. But also in jurisdictions such as the US, you have complex rules like origin-based taxes, where the local taxes are actually based on the origin of the transaction. For example, if your vendor is located in Chicago, you might have that vendor address, but they ship from a plant in Evanston. And that changes the local rate. So you need to anticipate challenges where vendor is charging me this, I'm calculating a different rate by 1%. In a lot of cases, you might want to define those tolerances to let those invoices go through and pay as charged. How will tax amounts post to your ERP? I mentioned this before. You can do nothing in your procurement system, but then you're left to pushing in all the necessary data elements down to your ERP and driving a tax calculation at the time those AP invoices hit the ERP solution. Or you could limit the integration work and do some sort of calculation from your procurement system. But kind of coming up with that plan on how taxes get pushed down is really critical in terms of an implementation. Reporting requirements. These procurement solutions have a lot of different places to get data. You can pull directly from the OK to Pay file. There are canned summary and transaction detail reports. And you need this information to support audits, to support compliance, and to support reconciliations. You should be reconciling spend going through these systems with what's hitting your ERP solution to make sure some things aren't getting missed and that the timing of these transactions are aligning. And another one that we've seen a lot of value add around with these procurement systems, and Mike kind of alluded to it, is building additional automation around retrieving documents in these procurement solutions. And a big one for tax is the ability to pull copies of vendor invoices. So under audit, a Texas auditor might come in, pull a data sample and say, hey, here's 1,000 invoices. I want you to show me copies of these invoices to prove that tax was actually paid. And that is a real struggle for tax departments and a major internal cost. So some of the features and the APIs available in these procurement solutions now enable you to take a listing of invoice numbers, upload it, and pull back a zip file or extract to a folder all the invoices that are being requested. What tax solutions should be used? So you have options, and we'll go through a pro-con analysis of what should I do. I know I'm an organization, I buy a lot of things, I have tax exposure. What should I be doing? Well, one is you always have the do nothing approach. You can always just pay as charged and let the invoices go through. In mid to large companies, we really don't recommend that. We like some validation up front. You can also use native configurations within these procurement systems. So they have tax code tables and tax logic that meet some basic functionality. And then what we see as best practice, especially for large organizations, is to leverage a solution like Vertex O Series, a tax engine to automate the calculation and reporting of these indirect taxes. So quick pro-con analysis of those three different solutions. Obviously, if you go with no solution in a procurement transaction, you don't turn on tax validation, you don't have any calculations. It does reduce the upfront implementation costs. You do have some baseline functionality in the back-end ERP to trigger an accrual at that point, although you'll have to feed all the data needed down to your procurement solution, and that becomes difficult if you're posting FI-only invoices. And there's no additional third-party integration that you have to maintain. The negatives is it really limits your ability to short pay and validate vendor charge tax. Yes, theoretically, you could recalculate tax when the invoice hits your ERP, but do you really want to short pay? Do you really want to stop the processing? Because the whole point of OK to Pay is that invoice is OK to pay to the vendor. So that would create some process challenges. And it does require significant more development in order to ensure taxes are funneling down to the ERP system properly. So pushing those additional data elements, driving the right GL accounts that need to be applied to the different tax types. Option two is using native functionality within the Ariba's, the Coupas, the iValues. So these solutions do have some baseline functionality. We have seen it work pretty well for simplified countries that have a certain number of VAT rates, just a base rate, a reduced rate, and an increased rate, and not really taxation down to lower level jurisdictions. So it can work. So that is a benefit that you can have some automation. And I guess the negative from that standpoint is once you apply that configuration, you own it. You have to maintain it. And if you make one wrong entry in these tax code tables, it can really cause a lot of havoc based on the precedence logic. So there's a lot of regression testing that goes into when a country changes a rate, when a state changes a rate, how do you get those changes into the system, and how do you properly regression test to ensure it doesn't break anything in your system? There's also a lot of limitations with using tax code tables, rate tables, right? Because you have origin-based taxes, you have taxes down to the district level, down to the ZIP +4 level. Those tax code tables become pretty hard to maintain if you have to include every ZIP +4. And also you have localities that might tax differently than the state. So how do you manage a single transaction that has different rules? What we see as best practice is option three, and that's leveraging a solution like Vertex. It's the most accurate solution, both from a calculation, reporting, and compliance standpoint. It allows you to manage discrepancies, apply tolerances, and it gets taxes included in the PO and workflow process. You can have those estimated taxes. The cons is it is an implementation cost. There's work to be done. A lot of those steps have to be done anyway to make sure data is clean. And there's that additional integration that has to be made by IT. And we've worked with a lot of companies to build the business case to help decide which of these options is best. And what we've seen for option 3 is, typically you recover the initial capital by year 2 and year 3, and then you have a perpetuity of savings, talking about not letting cash go out the door when it shouldn't, no penalties and interest. We typically see that investment paying back for itself by year 2 and year 3. So what is a tax engine? A tax engine is essentially a third-party solution, standalone platform that takes inputs from a source system and evaluates, based on the nature of the transaction, if it's taxable or not and at what rate. And that's whether it's sales tax, GST, or other country-level taxes. Functionality around those tax engines, there are a number of APIs available, so web services, REST APIs, Java APIs, and there are integrations already developed. And I know Kristen will talk a little bit about this to some of these procurement solutions. There's global content for purchases, sales, and goods movement, so you don't have to manually maintain that configuration. A big benefit is there's updated monthly rate and rule updates. So Vertex has a large group of tax technical analysts that look for changes and actually apply those updates and push it through in an update file. So you're off the hook for maintaining those rate and rule changes. You can tailor the configuration in these tax engines to mirror custom rules that you want or nexus settings. So you have the ability to tailor those, the configuration in that engine to your tax footprint and your tax profile. And then it's a single source for compliance and audit reports, and allows you to create roles-based security. Overall, the benefit of these solutions for procurement is, again, it's one solution to manage all the taxes. You don't have to worry about going in these tax code tables, making changes, cleaning up the tables as legislative changes are coming through the pipeline. There's content for 160 countries, so if you want to, you could literally implement that engine for every jurisdiction that you're implementing in. It does eliminate a lot of manual processes, right? That's manual processes around regression testing, manual processes around picking tax codes in the procurement system, entering tax accounts for GL. And it also reduced a lot of the operational expenses because, and this is a huge value, that when invoices come through the network and it triggers invoice validation and tax validation, if you're buying that computer for manufacturing and it should be exempt and your vendor didn't know that, they're going to calculate tax, but it can automatically go through that tax validation. You determine that it's being used for manufacturing and automatically push it back to the network with a message saying, hey, this is a manufacturing purchase, you shouldn't be charging tax. That's not 1 minute spent of manual effort to push that back. Where if you look at, paper invoice, somebody keying it, discrepancies, it becomes much harder. So as it gets more digitized, that's really where it shows the value of having this validation all automated to push it back to the vendor and let the vendor worry about getting a clean invoice. And it also allows you driving the correct GL posting. So again, tax doesn't have to manually select the GL. And then finally, the big value, improved cash flow. Don't let cash go out the door, especially nowadays. If it shouldn't, it's very hard to get back. Sometimes you have to go to the vendor. Sometimes you have to pay a firm like a KPMG to go get it from the government, and you end up paying a contingency fee on that. You want to reduce penalties and interests. Jurisdictions are really getting aggressive to manage some of the shortfalls they have in revenue. So these penalties are becoming punitive. There's more transparency into the procurement process. You see the true estimated whole cost. And it also eliminates a lot of that back-end manual processing, like reviewing tax rates, reviewing tax rules, performing regression testing, updating ERP configurations for all these different tax codes when it can be simplified if you use a solution like Vertex. And then finally, it empowers your tax departments because there's a single place to go for configuration, for reporting, to drive accurate tax results across the procurement process. And with that, I'll turn it over to Kristen to talk a little bit about what Vertex is doing in this space.
That's great. Thanks, Mark. Great, fabulous job, Mike. Tons of great content. So great job to you both. So the question now is, where does that leave us? Where does that leave you? You just got delivered a lot of information. We're looking obviously to educate you during this webcast and really help you, take this information and apply it back to your organizations and to your positions. So where it leaves us, it really leaves us in a bit of a perfect storm. So let's break this down in real time in order to help you plan for your organization. Where, from my standpoint, from where Vertex sees things, U.S.-based tax and procurement, and even global supplier-based tax, is really where sales tax was maybe like 20, 30 years ago. So sales tax was once really challenging. I think everyone kind of really understands it now. But it was once was really challenging, and I don't think we should take that for granted. It wasn't automated, and during that time, organizations were really looking to make certain that their sales reps or their order entry folks weren't making tax decisions. Right? They wanted to take it a step as things were getting more and more complicated with all these jurisdictions and audits and things like that. They needed to have better tools in place. So now we're really seeing that on the procurement side of the house too, where organizations are truly looking for a way to take the burden of potentially, AP professionals making tax decisions when, they shouldn't have to do that. Should not be part of their job. It's not a part of their responsibilities. They're not experts in tax, but we need to make sure that effort and make sure that compliance and those decisions making processes are still in the hands of the right people, which are the tax professionals, right? So we need to make sure that everyone across the board has the right tools to really make sure that your company is compliant, but that they can do their jobs. So the fact is, and if you haven't gotten this already from listening to Mark, U.S.-based consumer use tax and global supplier tax is really, really complex. While we're all familiar with sales tax or VAT on the customer side, it's in our day-to-day lives, so it's pretty straightforward. It's a percentage-based pass-through tax. So what I feel like might be happening is procurement professionals are like, it's just tax, it's just sales tax. Well, when it comes down to it, it's really, really complex when you talk about from a purchasing standpoint, and it's far more complex than it is with sales tax. So things to take into consideration, and Mark kind of spoke to these points, is that sales tax and consumer use tax on the supplier side deals with actually multiple tax types. It can be based on, what Vertex would call multiple tax drivers, if you will. So, what is being purchased? Where are those items being used? How are they being used? Who's using them? In what manner? All of those things really come into play, and can affect, what kind of tax should be calculated, what kind of tax your supplier should be charging you. So those are very, very important. So not to mention there are a lot of accounting implications with supplier-based purchases, and they have to be taken into consideration. And the sooner the better. So when it comes to, I would say there's really two groups here. There's your old school, SAPs and Oracles, your old school ERPs, I should say. And then we've got newer breed of ERPs, maybe your Workdays, your NetSuites, your Microsoft 365s, and your best of breed procurement providers, your SAP Ariba, Coupa, TradeShift, Bassware. So with the old school SAP, Oracle ERPs, there's a lot of functionality. They've been around for a long time. They have very rich partner ecosystems where they've got lots of resources. There's lots of tax APIs out there, lots of APIs, I should say, and pretty robust tax APIs. And the integrations cover a wide range of functionality. So you'll see that, when Mark went through tax on a PO, tax on the requisition, all of those things, you'll have functionality there built out. And I would say, if anything, we probably take it for granted that it's all there and built out. It's because you may be in a position right now where, it was always there for you when you joined your organization. Maybe you weren't the one that implemented it. So it's stable and it's reliable. Well, with the newer school ERPs and those best of breed providers, procurement providers, especially the best of breed procurement providers, they're still building out tax functionality that Mark covered. They had, I think, initially really took on, oh, well, we're going to be, one shop for everyone. But when it comes to tax, it's pretty complicated, and most of them don't want to do tax as their main profession. They want to stay, true to, procurement, and offering more and more functionality for, procurement professionals to make sure you're staying strategic and you're able to maintain your suppliers and all of those things. So what happens is, it does take some time, and two companies, two partnerships really have to come together with your Ariba's and your Coupas and your trade shifts and agree to development efforts to build out, potentially core platform additions to, be able to even support tax on a PO, as well as tax APIs and as well as integrations. So, there are all of those companies in relation to Vertex are in different, I would say, areas or ranges of those development efforts. But I think, it's very important to note. And I think, as you as professionals embark on, these procurement transformations, or as you're revisiting things of saying, hey, what should we be doing better? Those are some of the things we want you to take into consideration. Consider tax, consider it often, consider it early, partner with your tax professionals. So, those are the really, I think, really important things that we want to make sure that you're focused on. And I would say that one of the main reasons is no one likes to find out during an implementation that, they're going to have to build a 6-figure, custom tax integration in order to get something done. And that's what a lot of our clients are seeing. And I think we really want to make sure, hey, we're still getting the word out to procurement professionals as well as to tax professionals, and pull us in, work with the KPMGs and partner with them. And then, if Vertex can help, that's awesome as well. So, in taking this to another spot, as you transition from, sitting in on a webinar, it's all great information, but how, as a company, do you empower tax and procurement professionals with the right tools to really manage your organization's compliance and the risk? I would challenge you to ask yourself some really key and critical questions. And I think Mark covered quite a few of these, but procurement and tax really need to partner often, partner early, take a step back, sit down and review the processes that are in place right now. And most importantly, where do you want to go in the future? Where can potentially automation help support those goals and those requirements? So I would say, a few places to start might be, how do you know? How do you know if your suppliers are charging you the correct sales tax amount? Are you confident with that? Are you self-accruing when suppliers don't charge you tax or don't charge you what you think you should be charged? Do you have a lot of invoice errors? And, what's the timing? How much time does that take your AP professionals, your tax professionals to figure out those issues? How much does that really slow down your invoice processing time? When you start talking about hundreds of thousands of invoices per year, there's a huge impact on your day-to-day business and your KPIs and things like that. And it's a negative impact. So another thing to do is ask, well, is your tax department constantly trying to educate AP on tax or answering questions? And how much, are AP professionals trying to spend on that? So, all of those things are, I think, really key. And you can take back to your organization and say, what are we doing? Is this, are these good things or are these bad things? And what can we do? What do we need to do to move forward? So key insights and some key takeaways. I think the messaging that I give to a lot of our clients, and I know, Mark, you do as well, I think some automation is better than no automation. You get the rates, you get the rules, you get the regulations, you're able to map, to our rates and rules. So you don't have to worry about things like that. And you're really going to look to empower your employees with these tools to do their jobs and keep your organization compliant. So, a combination of, and Mark alluded to this, combination of maybe some native or, and a third-party tax engine like a Vertex might make the most sense. If you reach out to KPMG, they're more than willing to help you, make that assessment. They're very knowledgeable as to what's out there in the market and what your best options are, what other clients have been successful with. Another really important insight is you keep in mind the end-to-end solution and the accounting. So ultimately, even if you use a best-of-breed procurement provider, where are you going to reconcile? Where are you making your payments? These are all things that need to be taken into consideration. This is not just a Coupa to Vertex integration. This is a Coupa to Vertex to JD Edwards or to PeopleSoft or Oracle or SAP. And how do those systems work? So those are big things to consider as you embark on, a project like this or an evaluation, or even trying to make the business case to say, hey, we need to do something with this. We're all facing, mounting pressures of perfection, of risk management, of compliance, to just name a few. So, unfortunately, that's probably going to increase. But I think, we are in this together, and let's partner together. Let's work with KPMG and Vertex and you, and we're here and we're willing to listen. And I think we're willing to learn, and we're able to innovate together in order to see. I think that there's a whole vision of things out here from an automation standpoint with indirect tax and procurement that we haven't even hit upon yet. So that's the vision I see us moving forward to. But I would really challenge you to say, hey, let's work together. We can do this together. Peter?
Thank you very much, Kristen. And thank you for other presenters. I'm going to ask them to come back and join us in just a second. What I'll do is I'm going to take the slideshow off now so that you can see our heads. We have had a bunch of questions come in on the chat. So thank you very much for that. I'm going to try and answer them, or at least ask them, in the order in which they came. I am afraid I don't think we're going to get through all of them. However, we will be contacting you after this webinar, so hang in there. We will get to every question that we possibly can, whether we can do it live or not. So the first question, I guess, actually the first of two, I think, to you, Mark. So number one, how would this help to get the tax exempt certificate to the vendor? So I think this is something you were touching very briefly on, Mark. Yeah, do you have a response for that? How would it help to get the tax exempt certificate to the vendor?
Yeah, I think that's one of the huge benefits, taking that step with option 3 and integrating a system like Vertex, because it allows you to drive taxation and there are integrations available. Getting that tax on the PO and that calculation up front, because that's really where you can trigger workflow. If you have a direct pay permit, you can build that logic into the PO workflow to say, hey, these commodities or any purchase in this state, I want to add language in the PO. Hey, I have an exemption certificate, direct pay certificate, attach it. Or if you're really sophisticated, have a solution like the Vertex certificate portal, you can just put a link in that to an exemption certificate so they can manage applying that exemption. So I think having that ability to evaluate taxes at the time of PO and building a distribution process around your own exemption certificates can really be handy.
Great, thank you. We had another question. It was also to you. You mentioned regression testing. So when you were talking about integrations and building out, what do you mean by regression testing?
Yeah, so if you look at the native structure, if you go with, let's say an Ariba has a tax code table, a tax code rate table, and a tax code lookup table, and it's literally, hey, if I see this commodity code, this origin country, this destination country, I want to map to this tax code and this rate. And based on all the permutations of your business unit, you can start, and all your commodity codes and all your ship to locations, you can see how that table quickly builds. And there's a precedence logic where once it finds a record, it stops. So if all of a sudden you go live in a new country and you need to populate 50 rows into that table, or a jurisdiction has changed the taxability of a commodity code, you need to extract that data out, update the tax code lookup table, pump it back into your procurement system, and make sure nothing blows up. So rerunning transactions, probably a couple for each country, reverse charge, non-reverse charge, goods, services, and making sure you're getting the right answer. Because if you put in a bad record that is missing a destination country, well, now automatically that can trigger for every purchase. So it's just based on the nature of the native functionality in the systems that we highly recommend when you're changing those tables to do a lot of regression testing.
Thank you very much, Mark. The next question, I think, Kirsten, this is aimed at you. So, but if not, feel free to deflect. What is your experience in having an effective Vertex tax engine for AP in Brazil and China, where indirect tax rules are very complex or not always clear and potentially subject to interpretation? Any practical experiences you can share? So those really complex jurisdictions, with a tax engine like in places like Brazil or China.
Right. I'm sorry, Peter, that question was to me, correct?
It was, yes.
Okay, great. Yeah, those areas are very challenging and very dynamic. So I think the way that I see that is, and we absolutely have the data and the resources and the folks on the ground to make sure, and we've had build a lot of partnerships there. So I think it's helpful. It would go back to, though, again, to, how much with the Aribas and the Coupas are they able to help support that as well? That would be my only concern with that.
Great. Thank you very much, Kristen. So another one, I think, Mark, you actually partially answered this one. Should tax be part of the PO when the tax amount should be determined by Vertex? At the time of the PO creation or at the time of receiving the invoice? So should tax be part of the purchase order when tax amount should be determined? Should it be at the time of PO creation or at the receipt of invoice?
Yeah, so we recommend at the time of PO, and we know there's some limitations around certain procurement solutions that it doesn't trigger the native event to say, go get me tax, but there are workarounds for that we've implemented, where you do polling and push taxes back into the PO. But and other procurement solutions like Ariba absolutely trigger a tax call. So if you have that ability to get taxes on the invoice, it is so beneficial, right? Because you can trigger workflow to say, hey, if it hits these commodities and it's in this jurisdiction and I get this tax code back or this message back from Vertex, I know I want to put on the PO, hey, this is a manufacturing purchase, please don't charge me tax. And then also if it is a taxable transaction, right, especially with these higher rates, you want to make sure when it goes through the workflow that naturally occurs around approving purchase orders, that you're showing the true cost, because in the US, that's an additional expense on the purchase, is the sales tax that you're paying to the vendor.
Yeah, I'll chime in a little bit there as well. And yeah, I think the key touch point there is how you do your budgeting, right? Do you need to keep a reserve for the extra tax cost, or are you able to kind of bring that information back up front? And then also looking at integration complexities, right? As we're talking about these best of breed systems, what are you doing with that PO data? Are you integrating that PO data back to your ERP? And what's the completeness information there? Are you including that tax information at that time, or do you need to enrich that as well?
No, thanks, Mike. That was a good point. I've got one question that I specifically want to ask, and then we're going to keep going. It looks like we're going to have many more questions that we've got time for. So here's what I'm going to propose. We will draw to a close on time, but I might keep the call going for a few more minutes to see if we can get through a couple more of these questions. So here's one question, and I'll put this through to you, Mark, first, but I'd also love to hear from other panelists. How do you get your P2P project approved and funded? So how are you going to make the case? So Mark,
I think we lost connection there, but yeah, I think I got the question. And ironically, we're working with a couple clients now to get this approved. And it's really a two-sided question, right? If you're talking about a procurement project, that's a pure IT project. There's separate conversations going with there. I'm guessing the question is, how do you get taxes included in the budget for the procurement project? Because sometimes it wasn't even anticipated, right? And that's, creating the business case. And I mentioned it before that typically we see the investment paid back in year 2 and year 3. So look at what your error rate. If you've had historical reverse audits, right, what's your error percent? Come up with that cost in terms of what you've had to pay for penalties and interest. How much did you have to pay a firm like KPMG to go back and get you money in contingency fees? Those contingency rates can be up to 15 to 30%. And then also we factor in internal costs. So what is your internal hourly rate? And then estimate based on the number of invoices that come through each day times the error rate. Does it take 15 to 20 minutes to typically address these issues, and you come up with your internal cost? And that's where we generally see in the red that first year, if you factor in the implementation costs, the license costs, right? It's going to be an investment in year one, but then year two, year three, the savings of not letting cash go out the door, not erroneously paying tax, no penalties and interest, that you are making money back. You're in the black, and you have savings that you're getting that in a perpetuity. So it's really breaking it down to the internal costs, the overall cost of licensing a new solution, and then what's your error rate and what cash goes out the door today erroneously with taxes.
Great, thank you, Mark. So we've run out of time. So as I said, I'm actually going to extend the call a little bit for those that want to hear some of the questions, because we've got a couple more really great questions come in. But for those of you that can't stay with us, thank you very much. What it remains for me to do is to actually thank our experts. So Mike, Mark, and Kristen, thank you very much for taking part. Stay on the line, guys, if you can, because I think we've got a couple more corker of questions for you. I want to thank KPMG and Vertex for making this webinar possible, and for the Executive Leaders Network for organizing it, so getting all the invitations done and the logistics. And most of all, I want to thank you, the participants and the listeners who have taken part. You've got questions in there. We are going to stay on the line, I think, for a couple more minutes to see if we can answer some of these questions. However, if you can't stay with us, we will be reaching out to you after this webinar. So we'll have opportunities where you will be able to look at the video again, check out the recordings. We really do recommend that, this is a complex world, and it's moving fast, and it's really more beyond than I think than any single organization can deal with. So I'm going to echo a point that Kirsten made. Look for partners, look for those people that can work with you at speed and scale and scope to address these issues. And don't wait. If you've got something that is pressing you, and judging by some of the questions, you do have some issues that you're facing, reach out to either KPMG or Vertex, because they will be able to help you move forward. So with that, I'll say thank you for those that are going to drop off the call. For the panel, if you don't mind, if I can hang on to you for a couple of minutes, let's see if we can get 2 or 3 more of these questions done. So are you okay with that? Good. So the next question then is, how do you manage tax for materials shipped to points other than the end location? So when you're shipping goods or materials to points other than the end location, how do you manage tax for that? Who wants to take that one?
Yeah, I can chime in, and then Mike or Kristen can jump in. So there are a couple options, and it kind of depends on the fact pattern. But you do have the ability. A lot of these procurement solutions, you can add fields. So if you ultimately know the true destination at the time of the PO, you could look at leveraging one of those custom fields. So the standard ship to is the intermediary ship to, and then you have additional fields where you put in the true end user location. And these integrations with Vertex allow you to send additional fields, and that's the address that you use to drive the tax calculation. In other scenarios, you might not have that. So you might want to drive a non-taxable answer right up front, and then build an offline accrual process. So in some cases, you just can't get the right tax answer at the time of procurement. And an example is laptops, right? A lot of companies buy 1,000 laptops from Dell. They all get shipped to one location. They sit in the IT department, and they slowly get distributed to different locations. So capturing that subsector of spend and not paying tax, and maybe that means issuing an exemption, a multi-use certificate to your vendor. There's ways around that, but then driving the right answer not to pay tax on those transactions, and then picking it up in a batch process behind the scenes. That for certain scenarios where you just don't have the information at the time of procurement, that's typically what we recommend. And that's one of the values of a Vertex is once you plug in all the config, you have the rates and rules. It's just another data file that you extract and you can load with BCI. and build the accruals, build the journal entries that need to get pushed back in the system. But in some cases, you can't do it real time.
Okay, thanks very much, Mark. We're 5 minutes past the hour, and I think sadly we're going to have to draw it a close here. So for the delegates that submitted questions that haven't been answered, I have recorded every single question. I'll make sure those get circulated to our panelists, and we do reach out to you, and we will answer those questions. And we will make sure, as I say, that you can look at the video after this event. It'll take a little while to get that up and going for you. But finally, as I say, once again, thank you to our panelists, thank you to the organizers, but most of all, thank you to you. So thank you and goodbye.